Good evening, everyone. This is part two of the tone vase market analysis. I'm going to try and do two of these every week, one over the weekend and one in the middle of the week, maybe Tuesday or Wednesday, depending on my schedule. So to start off, just that's my blog I have up on the screen, and I will be at the following two events coming up. October 18th, you see there on the right, I will be speaking at George Washington University in Washington, D.C. And then I'm not going to make it to Crypto Cannabis this year. I'm also not famous enough to speak at Money 2020. I was hoping to attend those in person, but I won't be making them. But October 24th, I will be in Las Vegas speaking at Coin Agenda. So if you're in Las Vegas, you will be able to find me there over those 2 days. Okay, so with that, let's jump right into the market. I'm going to try and keep these quick and straight to the point. First off, again, this is something I like to look at every morning. The moment I wake up, I go straight to this page. Not that it's all that great, but it's just everything in one place. The market has closed today, and we can see that the VIX was up. Gold was up a little bit. We have the VIX over here, gold down here. You have your equities up there, and oil fell a little bit. I just like this page for convenience. It's especially good like over the weekend where you can see a big overview. Let's just jump right to the markets. Again, I don't have anything pre-highlighted. I kind of like doing it this way, but the people in the comments might disagree, so let me know. Some people like to have their analysis remain on the charts. It's good, but it could give you a bit of a tunnel vision. I kind of like doing it as I go. I always like to have a fresh look on things. And another reason why I talk about the indices is because this way I'm not blindsided by my positions. This way everything is original and everything is completely unbiased. So let's take a look at the S&P 500. We can see that yesterday there was a pretty big day, put in a nice big scare in the market. So I'm going to just jump right into annotations. And nothing has changed. I'm going to pick a color and got a trend line here and then. So we were looking at this symmetric triangle before. And even though we did break to the downside of this triangle, the thing that still bothers me is that we're going into the US election. So I expected things to be choppy. So even though we broke to the downside of this triangle, there is a chance that we go down, but another Trump slip up, and then we go right back up again. So I'm expecting the markets to be very, very choppy. And I don't think this breakout of the triangle will cause a complete crash, but we know how to think about it because, and I'm going to make this line nice and thick, around the, I guess, 2120, right here, we have this line right there. And this is going to be very important. That was the previous low from last month. And it was definitely resistance back in June. So if we come to this line, we can make a double bottom. Personally, I'm not a big fan of double bottoms. I can talk about that if we get there. But if we go below this line, then we could definitely see some downside. And how much downside can there be? Well, something like this, right? We have room. We haven't been oversold in a long time. I mean, even this major fall still kept us above the oversold area in the RSI, and we came just as low over here, and we were a lot higher price. So if we hit that RSI oversold condition, that wouldn't be necessarily the end of the world. And also, if you look at the MACD, we just turned to the downside. So this isn't really helping us. but now that we're below 50 on your SI, we're going down a little bit. That's all I will pretty much say. I'm not looking for a complete disaster yet, but we can definitely have a little bounce, to the upside to test the breakdown area, and then from there, it's very possible that we make one more low before eventually going back up. I am overall bullish on the markets, but that can easily change below 2120. So my focus was the S&P 500. Oh, let's briefly look at the weekly. I don't want to spend too much time on it. The daily is a bit more important, but from the weekly, again, we can see that 2134, which is very close to our 2120, is a very significant area. So we're near that. The markets are still very, very bullish. But from the weekly side, there is a very minor cause for concern, and I'm just going to point it out. Again, this is another reason why I like doing these. Just glancing at the charts, and nothing is pre-rehearsed, so that the audience can see how a trader analyzes things in real time. We did have the MACD cross, which is somewhat significant because the last time it happened, we were here, and the previous time we were here. So this seems to be a decent indicator that things aren't all that rosy. We do have the 50 coming up, and 50 was a bounce right here. So we'll see if we can bounce again. And if I make my one more line, I want to make this nice and thick as well. I'm going to put it right here at the 2125 area. And again, this looks like a very good support and resistance line that we can possibly bounce off of it. And if we fall below it, oh, didn't mean to make that. How do I get rid of that now? Here we go. If we fall below that, you are looking at this 50-day moving average. Even though it hasn't been all that significant, we did bounce off of it here, couldn't close below it there, came down to it right here. So it has been somewhat useful as a guide to how far we can actually fall. So that's something else to keep in mind. We're also way overextended over the 200-week moving average. We came close right there. So again, everybody was panicking back in February, and we bounced right back up and made new highs. So I'm not too worried yet. Let's go back to daily, and just a very quick glance. The Dow is identical. Oops, sorry about that. The Dow, INDU, is also very identical to the S&P 500. You can also see the 50-day moving average has been resistance for quite some time. The only real difference is that the Dow is lower to the September lows. So if we fall below that, the 1800 line is very the 1800 line is very significant. If I can like raise it up a little bit. There we go. This way it's kind of one color. So the 1800 line has been pretty useful, and that's what I'm definitely going to watch. A weekly close below the 1800 area can definitely set us up to come down to the 200-day. So that's the Dow. And like I said last week, the NASDAQ, or the top 100 in the NASDAQ, is acting very, very differently. You can see that it is being held up by its 50-day moving average. And the NASDAQ literally just hit its all-time high 2 days ago, which was unbelievable. I'm assuming it's an all-time high. It's possible that it was a little bit higher in 2000 before the dot-com crash. I'm too lazy to go and take a look, but that doesn't really matter for our purposes. It definitely hit like a 10-year high, which is pretty much an all-time high. So the NASDAQ is still holding up well, even though the MACD has crossed to the downside. Okay, one last point on the S&P 500 and equity markets, because we are coming up on a big anniversary day of the major 1987 crash. I guess next year it will be the 30th anniversary, 2017. I mean, it's a minor cause for concern, or it should be something to be aware of. This was a snapshot on the 7th of October, so this was almost a week ago, and so the day is coming up. I don't expect this to happen, but these charts do look kind of similar, so something to keep in mind. Another view of it is right here. This looks like a zero hedge chart, but it's that's how they like to draw them. So that's another view of it. Where we had that's the Brexit scare that you can see the big green down spike. That was Brexit, and that was the overcompensated recovery of the Brexit. And I should probably talk about that, but I'm already talking about the equities too long. What happens in the Brexit is everyone thinks the market is going to crash, and everybody sells so quickly that there's nobody left to sell. And when there's nobody left to sell, the market immediately reverses to the upside. The shorts have no choice. They have to immediately cover. And other people that were expecting a market crash because of Brexit basically were clueless as to what to do. They couldn't understand what was happening. And the market kind of left them in the dust. And they missed out on that gain. The reason why this happens is because most people are on the wrong side to the downside. The Brexit caught them by surprise. They had to panic sell. They panic sold. There was nobody left to sell. The market immediately recovered, and then no one's left to buy. Everyone is like clueless. No one's left to sell, but the buyers are scared to come in. It goes up without them. When they finally get in, it's too late. The market's starting to come down. So we'll see how that goes. Okay, let me put that back up. All right. I guess let's jump into the dollar. Let's talk about the dollar. So the dollar just hit a 6-month high, and because of this, there's not much. We are breaking out, and usually when you break out, it means you want to jump on the bandwagon and buy in, though I guess buying the dollar would be selling other currencies. Maybe I'll just do a video on the currencies in general. So this was significant resistance right here, which we crossed. The problem is that we are now overbought on the RSI for the first time in 6 months, and this is getting a little out of hand. Of course, we have the opposite situation of trying to catch a falling knife. So you don't know where it's going to end. If a trader knows when this is going to end, they are a better trader than I am, and they shouldn't be watching these videos. I am not going to guess where this is going to end, but it will end, and the dollar will pull back, most likely back into like the 97 area, but it also depends when it ends. So at this point, when we're hitting a 6-month high, there's absolutely nothing you can say about the dollar other than it's going up. We can take a glance at 1 year back to see maybe there is some kind of resistance on the chart. And if you look at 1 year back, now you're starting to see a little bit of something. You had a previous high over here at 98, but now you once again have the overbought RSI problem in that, I'm going to circle it again, make it a little smaller. You see, once again, this is daily overbought, and we have not been this high since all the way back here. And look what happened. That wasn't good. That was a little scary when that happens to your currency. And then it never made it all the way back there, right? That was the previous high. So you don't know when this is going to end, but it will definitely end. So at this point, let's glance at the weekly chart. But we're going to change this to fill the chart. Let's do that. So here we go. So this is showing us that 100 is significant resistance. And it's also showing us how the markets can stay irrational way longer than a person can stay liquid. But actually, before I do that, I want to see more. It's a weekly chart, but I want to see more. Okay, here we go. This is this is good. This is good right here. Okay, so let's annotate. All right, so we can now put in our horizontal resistance right at 100. 100.71, 100.6, they're exactly the same to me. Those are double tops. I'm not a big fan of double tops, but look at this specific double top. I understand that the second one came up, 10 cents short, but look at this monster divergence right here and right here. I mean, you can call it divergence, you call it confirmation, because technically we were at 100.6 versus 100.71. Either way you look at it. That was significant. And one of the reasons why we definitely went down, we made a new low at 91.88. That was a nice 2-year low. But the dollar is very, very bullish. And the RSI definitely stayed irrational for a while. And we are a long way away from here. So whatever pullback we get in the near future will probably not be all that significant. And what I am looking for is definitely one of these. I am looking for a monster breakout in the dollar. The best way for that to happen is if it consolidates around 100. The same way it consolidated in this area. I mean, it consolidated for years in this area. I'm hoping this won't take years, and I don't think it will. So if it consolidates for a good 3 to 4 months, where all of these indicators get to kind of reset, and then we shoot up to the upside, might even go all the way to 120. So I'm definitely bullish the dollar. And because the dollar has been doing so well the last couple of weeks, gold has really got smacked down. I have the weekly chart up, but on a 5-year scale. So here's the good news. Now that I see this, there's good and bad here. That there's both. I guess we don't really need 5 years. Let's do 3 years. No, sorry. Going back to 5 years. The reason I wanted the reason 3 years wasn't working for me is because the 200-week moving average was just coming up out of nowhere, and this is a little better. So, quick good news for the bulls. So let's make this green. So the good news is you might get a long-term moving average cross. The bad news, and let's make it red. You had a pretty significant MACD crossover. You are going down on the RSI. So you really want to bottom out, and you want these to turn. So maybe this will happen around this area. I have been fairly bearish on gold. I really thought we were going to go below 1,000. This was a pretty strong rebound from 1,045 area. That was a very strong rebound. So it is possible that we bottomed over here. It's possible. And we probably bottomed, but I don't know. It's just hard for me to admit to it, I guess, especially if I think the dollar is going to be incredibly strong. But we'll see. One more strong bounce, and then you can definitely say that things have bottomed, though we probably did. In the meantime, let's jump back to our daily chart. And 5 years isn't useful, so let's fill the chart. Here we go. Okay, so here's our daily gold, and we are now below the 200-day moving average. The 50-day moving average is coming down. And like I said in the last video, I was expecting a bit of a bounce. We may or may not get that because the dollar continues to be very strong. So right now, I would just hold gold. If you're long, I guess hold on to it a little. I would hold on to it a little bit. If I was short, I would probably also hold on to it. Either way, this would be a hold for me. I don't hold a position in it at the moment. But what I'm looking for is a breakout of this range. If it can go above 1270, it might have a strong rebound. But if we fall below whatever that is, looks like 1250, and close there, it has to close above these numbers. You can't just like touch them and fall back that day. I need to see a close there. So as long as it's in this range, it's neither bullish nor bearish to me. I want to see it go out of this range. If it goes out of this range to the downside very quickly, I would be expecting a big bounce. If it stays in this range for a while and maybe comes back up to 1270, comes back down to 1250, kind of stays there a little bit, and then starts to break below 1250, then I would look for a lot more downside, and I would be looking for a close below this low, which is pretty much 1200. But I do think gold has a little bit of downside left, unless it can come back above 1270, 1275-ish in the very near future. And if it does, this right here would be huge resistance for me. Well, maybe like 1300 area. Drew that a little high, kind of like here. And if it gets back to here, that would be another good short opportunity I would be looking at. Okay, real quick, somebody asked me to look at silver in the comments, and silver is the same as gold to me. They look almost the same. The good news for silver is that it's staying above its 200-day. The 50-day isn't really all that useful unless you start playing with parameters, which I don't necessarily advise, but it's doable. Like if I make this, let's make it 80 or something. And then redraw the chart. Right, so if you look at this, now it's looking very useful. The 80-day moving average, it's been support 3 times, but I don't know if this is a good idea to look at things this way. So maybe if it comes back to this average, this could be something. But again, you're looking at 1850, a significant resistance. You're looking at silver the same way as gold. Now, here's the thing on silver, and what should have been, if I was making these videos at the time, I'm sure I would have spotted it. But hindsight is always 2020. So over here, if you use closing highs, you have a higher close on the price. But if you look at the indicators, you have very strong divergence. So this was an indicator that things aren't all that rosy with silver. And I personally like to use closing values. I don't like intraday values. I always try to use the close whenever possible. Okay, and finally, let's take a look at oil. This video gets too long. I always do that. Those of you that watched this video last week saw me make the same mistake. Oh, that's how I always save my charts when I save them. I always save them as oil. WTIC. Okay. And this may not look like much, but to me, this is bearish. And the reason why this is bearish is, let's do a rectangle. Let's make it red. That's not one. That is two bearish Haranis right there. Okay. So that's twice. Oil has opened and closed inside a huge bullish candle. So candlestick wise, this is bearish. The RSI, and this is a little bit of a stretch. The RSI has made a lower high, yet the price has made a higher closing high. Now, the MACD is confirming the price. So you have contradictions right there between your momentum indicators. The MACD has not crossed yet, but this is something to watch, because once it does, if it does, it will confirm that we're going to the downside. We still have some room before we cross the 50 on your RSI, but this is looking bearish to me. So the moment we close above below 50, which might be tomorrow, I would be looking for downside in oil. How low would it go? I don't know. The 50-day seems to be useless. The 200-day may or may not be useless. Hard to say. But now we have also fallen and closed below previous highs. So we've now come back down and closed below this. We've now come back down and closed below this. So we're going back below our previous milestones. And I guess we have this one to go. By the way, I know I drew all over it, but again, hindsight's 2020, and I wasn't making these videos back then. What a perfect textbook doji reversal. My God. I love my dojis. I love my shooting stars. I love my hammers. And I love my triangles. You will learn that as we go, though I haven't drawn any triangles on any of my charts last video or this video. Okay, so we'll leave it on that note. Out of everything I've mentioned so far in this video, the one that I have the most confidence in is oil pulling back down. The S&P is choppy because of the upcoming elections. Gold and silver puked in one day, and now they're kind of holding steady. So that can go either way. Oil looks like it's the one general major market that might be due for a bit of a pullback. Okay, this video might have been a little longer than planned. If you like these videos, subscribe. Again, this is only video number 2. Plan to make these a little more organized, and we'll see how it goes. All right, thank you very much. Check out my blog, Liberty Life Trail. On Twitter, it's tone_LLT. Leave your comments, and thank you for watching.